Welcome. I'm very pleased to have here today Andrea Traversone.
Nice to see you.
Your fund is Amadeus Capital Partners, and it's had quite a history, hasn't it? It's been around a while, founded by a well-known Austrian entrepreneur, Hermann Hauser.
That's right, my partner Hermann Hauser and Anne Glover. Actually, we just had our 25th anniversary this year.
Oh, congratulations.
So, we've been around for a long time.
And how long have you been involved?
I joined Amadeus 24 years ago.
So almost from the very beginning?
Yes, that's
almost
right.
From the very beginning. Anne is Bank of England now?
Yeah,
is that
she's
right?
on the board of Bank of England.
And are they both still actively involved?
Yes, they're both actively involved in the business. Hermann focuses on the early stage side of our activities and overlooks most of our funds activities.
Do you have a sector focus for that?
Yes, we only invest in deep tech.
What is that? I suppose Chat GPT is a lot in the press at the moment and in
Correct.
people's mind. Is that sort of...
Yes, it would be. Deep tech is a little bit in the eye of the beholder at the end of the day. You talk to most VCs and they'll tell you, oh yes, we have 2 or 3 deep tech companies in our portfolio, and actually most of them do. The way we define it for ourselves is that we back company where there is some proprietary technology which is at the core of the company's product. And how does that get exemplified in economic terms so that they're visible and understandable? In the very long term, our businesses, because they have this core proprietary IP at its core, they tend to have much higher gross margins. So they tend to be in the 75 to 85, 90% gross margins. And when they reach profitability and much higher scale, it also turns into higher EBITDA margins because they have a core IP that it's hard to replicate or impossible to replicate, so that they don't have to outcompete on an R&D investment basis their competitors. And also is the same thing for sales. When you have less competition, you can defend your pricing strategy and therefore get better margins both at the direct level as well as at the bottom line level.
Can you give us an example of a portfolio company where you've perhaps gone all the way through to from early bit of technology through to a success, or maybe a household name? I don't know if deep tech
absolutely.
Household name.
Because we do deep tech, we are usually at least 3 degrees away from a consumer. So
it's a pretty guarantee that no one will have heard of the companies.
So what we say internally is that most consumers use technology from our companies without knowing it. So a technology that we all use is Bluetooth, and the market leader in Bluetooth was a company called Cambridge Silicon Radio, which is a Cambridge startup that we backed at their seed stage, and we built all the way to an IPO and beyond. And quite a few years after the IPO, eventually they were bought. Part of the business was bought by Qualcomm, and part of it were bought by Samsung. And the technology became embedded in most consumer devices, from television, phones, headsets, speakers, and most of the electronics that we use. And that was a company that reached a very high yield from a semiconductor point of view, production yield, high gross margin, and high EBITDA margin.
So in that example, how long would you have been in? You enter the seed stage, but there's a lot of tech to be developed and so on. But you got all the way up to IPO, which is quite some journey, I imagine.
It is, and that is the journey of most deep tech companies. Mm-hmm. And there are some challenges in the industry around the 10-year fund cycle business model for deep tech. In the case of Silicon Radio, I don't remember exactly a holding period, but it was probably close to 8 to 9 years.
Yes.
And that is the case for a lot of our deep tech companies, because as you said, there is a lot of R&D to do. And so holding periods beyond 10 years is actually quite normal.
How do you manage that with your LPs? I mean,
well, we obviously have to understand the development period of the company when we invest. So we are careful not to invest in companies which still are just starting their R&D cycle in year 4 or 5 of our investment period. So we try to match our investment cycle to the development cycle of the type of companies we invest in. And that works quite well. And then as long as the company continues to perform and there is the upside is intact and there is still value to be built, most of our investors are patient and they see how we are building value and these companies are creating value and they're supporting of that. However, the structure of the fund is still 10 years.
10 years. But you've got a provision so that you can
yes.
enable you to go beyond the 10 years.
Yeah, it's usually, most funds are 10 plus 3,
10 plus
which
3,
is usually 1 year extensions over three times.
Yeah, yes, and that's what you have in the...
Yeah, this is pretty standard
Pretty
market
standard.
for all investors.
Yeah. Can we talk a little about deep tech? I mean, where do you see the interesting bits of technology?
Yeah.
Are they coming out of universities, or are they coming out of entrepreneurs?
It is very much sector specific. So you were mentioning before ChatGPT. So AI and machine learning is a big area of deal flow, and it has been a big area of deal flow for at least 10, 15 years. We've been the most active investor in AI and machine learning in Europe for the past 10 years, probably. And we started probably earlier than 10 years ago. So that's a big area. That's a very well-established area. Other key areas are technology around sequencing, so all genetic technologies.
The gene sequencing.
Yeah,
I mean, the UK is a leader in that area. Is that? Should we thank you for that?
Well, I think, well, not us, but the entrepreneurs behind the company we invested called Solexa, which was another Cambridge University spin-out that created the chemistry, which is now the basis of short read sequencing. And we backed that company, which then was acquired by Illumina. It was a big outcome for us, and is now the basis of the sequencing market, which is a multi-billion-dollar sequencing market. And actually,
I mean, what's the revenue model of a company like that?
If the company has an equipment and reagents model, so it's a high repeat business, so it's a razor blade model, which is very attractive with very high margins, back to the point I was telling you about gross margins and EBITDA margin. And over the years, we backed many other companies in this sector, and about 2 years ago, we backed the next generation technology in another British company, to your point about the cluster of genetic technologies in Britain. There's another company called Oxford Nanopore. We created the next generation, which is called long-read sequencing, which is much more effective, much more cost-efficient. And this is a business that went public as well about 18 months ago. It's now about a $2.5 billion market cap company. And in between those, we've made many other genetics, data services, deep tech investments in the sector.
I want to come back to Hermann Hauser for a moment. Hermann Hauser is well known by people of a certain age, put it that way, for having been involved with the BBC microcomputer and the Acorn, I think it was called, and so on.
That's right.
But the big claim to fame is about ARM, which of course is a phenomenally successful Cambridge company.
Correct.
And how did that come about?
Basically, ARM was a spin-out of Acorn, and it was originally founded by Herman and his co-founder in Acorn, and then it took a life of its own and developed this wonderful business model, which is a bit of an outlier, which is this IP licensing business model, whereby most semiconductor companies in the world are now to license ARM's IP to produce their semiconductors, and they've been able to execute on that strategy and continually to build IP, so that they become embedded in the semiconductor industry.
We all use ARM products.
That's another company that whose products we use all the time.
All the time, without really knowing.
Without
really knowing.
And now, originally the company has always been focused on microelectronics and electronics goods. They're now entering the data center world, and there are now servers based on ARM's architecture.
Yeah. Of course, the consumption of electricity and power is such a big thing in data centers.
Correct, and we are looking and backing companies that are solving this problem.
Andrea, it's been a great pleasure speaking to you today. Thank you very much for joining Venturing On.
My pleasure.